Despite providing some of the best returns in the last couple of years, Tesla is still regarded with tremendous skepticism. Today we'll see where Tesla's management made a big mistake and if Tesla shareholders should be worried about the risks that I'm going to highlight. It all started with a tweet sent by a well-known Tesla investor. I really wanted to see the arguments that would compel someone to bet against the leader of the EVs market. That's perfect, as I want to discover both sides of the company, so let's start with the first argument regarding margins. I quote, "Many of these Tesla investors believe that there will be no degradation to the gross margin." That's not entirely accurate, since Elon Musk warned us that usually passing the price cuts through the supply chain comes with a lag.
There is, with respect to cost structure, somewhat of a lag effect where there's latency in the supply chain. So the supply chain will take a bit longer to reduce costs.
So there will be several quarters of lag where Tesla's margins will suffer. Next, Tesla sets a clearing price with the objective of selling all its vehicles. For now, it seems like Tesla is forced to cut prices because of weaker demand. But if we look at the average price for a Tesla, it increased 37% from 2021, so these price cuts come as a result of substantial price appreciation. While lowering prices for current models is definitely not a part of the bigger plan, it shows Tesla's awareness in terms of the macroeconomic environment. Next, the author talks about the delay of the Cybertruck for 2024, but actually the Cybertruck will be delivered in the fall of this year. Moreover, the author argues that in spite of the price cuts, deliveries only grew 6% quarter over quarter, while Tesla grew its inventories. But this information is not entirely accurate because of two reasons. The first quarter is usually the slowest for Tesla, and the company still delivered 36% more cars compared to 1 year ago. Secondly, the inventory didn't grow significantly as there were only around 18,000 cars not delivered, and the miss came from the premium vehicles. This is significantly lower than the trend set for the last 2 quarters for the models 3 and Y. Next, Tesla's CFO has stated that clean automotive gross margin would fall but stay above 20%. This is indeed a miss for Tesla. The automotive gross margin came in at 18.3%, way below the 20% target, and promising over 20% was a mistake by management. But one real risk that I need to highlight is how the gross margin will look in the second quarter, since Tesla made more significant price cuts in April. Tesla lowered the average car price 6.3% in April compared to just 1 month before. Next, the author describes how Tesla only delivered 24% revenue growth compared to 37% estimated in November 2022, and moreover how the price cuts led to automotive revenue falling 7%. This is in fact accurate, as revenue estimates have been adjusted lower, but Tesla still managed to sell 36% more cars year over year. Lastly, automotive revenue grew 12% year over year. Tesla confirmed the goal of 1.8 million cars produced in 2023, which means 37% year over year growth. Hopefully, Tesla will maintain this target and no abnormal events will interfere. Next, the author estimates that Tesla's profit per car dropped from $15,000 to $7,500. The key for understanding Tesla's margins and the evolution of the profit per car is to look at the supply chain. The auto supply chain is the most complex, and again, it generally functions with a lag. So, it's clear that all the savings that will come from the vendor side will take more than a quarter to materialize. As a result, I expect Tesla to have volatile margins for the next quarters as it tries to pass some of the cost savings onto the manufacturers. Lastly, the author lays out the case against the FSD and the driverless robotaxis. While I believe that the full FSD probably won't be delivered in the next 5 years because of regulatory roadblocks, the good news is that Tesla doesn't need the full FSD to be tremendously undervalued. As I showed in this video, for the bull case, Tesla is worth as much as $350 without considering any revenue from robotaxis. However, it's great to see that the author acknowledges that he might be wrong. But then, he goes on and says that Tesla is a niche automaker. How can Tesla be a niche player when it's literally the most sought for auto brand? That's exactly the opposite of what a niche player is. But at least the author admits that Tesla is starting to produce extremely impressive EVs. And by starting to produce, I mean producing 2 of the best sold EVs in the world for the last 2 quarters, the Model Y and the Model 3. Not to mention the manufacturing progress that Tesla did that is widely recognized even by competitors. Additionally, the author acknowledges that ICE vehicles will represent only around 50% of the total market in 2030. This means that around 50% of the global auto market will be electric. So, betting against Tesla means betting against the leader of one of the fastest growing industries in the world. And even for the scenario where Tesla doesn't achieve full FSD, their manufacturing still puts them ahead of the competition. Lastly, from my estimations, Tesla will produce around 10 million cars in 2030, with a market share for EVs of only 12% in China and around 30% in the US. This would imply launching the low-cost model Model 2 sometimes in 2026 or 2027. It looks to me like a strong brand. The 1.8 to 2 million cars that Tesla will deliver in 2023 in conjunction with the best margin in the industry just isn't enough for some investors. Not to mention all the optionality from the energy storage and generation segment, as well as from the FSD and AI capabilities. To sum up, while I admit that Tesla's valuation might be seen as crazy and expectations are really high, I believe that Tesla is perfectly capable of delivering. The phenomenal execution so far in conjunction with top-tier manufacturing put Tesla in a really favorable position for the next decade. Please try to be as objective as possible and consider both the bullish and the bearish scenarios before investing. Next, I will be doing a complete financial analysis of Tesla and I'll showcase what my price targets are for buying the stock. Until next time, keep crushing it and subscribe.